You're listening to the Economics and Country Risk podcast from S&P Global Market Intelligence. In each episode, our experts will provide you with the where, how, and when to make decisions that transform your business.
This episode is an edited version of a webinar hosted by John Raines, Principal Global Risks Advisor and Lead Analyst for the United States at S&P Global Market Intelligence.
On February 24th, 2022, Russia invaded Ukraine with roughly 200,000 troops from Belarus, Crimea, and the Donbass. Most experts believe the war would last just days. Furthermore, the West promised draconian sanctions against Russia that would destroy it economically. But nearly 1 year into the conflict, neither of these realities have come to fruition, with Ukraine holding out and Russia's economy appearing to hold up. So how did we get here? And where is this conflict headed? To tackle these questions, as always, I'm joined today by a group of esteemed S&P Global analysts and economists. And those include Jack Kennedy, Associate Director, Alex Kochorov, Associate Director for Russia and Ukraine, Deepak Kumar, Associate Director for Asia Pacific, and Diego Escaro, Economics Director. Let's go ahead and begin our conversation here. Alex, I wanted to start this conversation because prior to the wars that you had said, and you remember this, that the odds of a war were relatively low. You thought that the odds were pretty low, and there were a number of different factors there. And then, of course, the war ends up happening. And so my question to you to start things off is, what were some of the items or the factors that ended up coming into play that you didn't necessarily see or envision prior to the conflict actually taking off?
Thank you, John. And yes, prior to the war, we said that Russia was most probably posturing by concentrating the forces on the borders to Ukraine rather than preparing for an invasion. The reasons why we thought so was that Russia had assembled about 200,000 troops, which we assessed was an insufficient number of troops for a quick and victorious war. We also knew that Ukraine was very likely to resist the invasion. We knew that the West would support Ukraine financially, materially, and supply it with weapons and munitions. And we knew that the West would introduce significant sanctions which would impact the Russian economy and cause significant damage. So over time, before the war, we were increasing the probability of Russia invading. But yes, as of February, we assumed that it was 40% of Russia invading and 60% Russia not invading. And yes, we got it wrong because of that.
And I'm going to go into that. Part of the reason why that happened was operational secrecy, right? I mean, how much of it is due to the fact that not only was this a surprise in some respects to some analysts, but it was also a surprise to some of the folks inside Russia themselves?
Yes, it is my understanding that many of the ministers only found out about the war becoming imminent on the day before the invasion. And specifically the economic ministers who were not prepared, and they did not have the Russian economy prepared for the war. And the fact that Russia kept half of its reserves in Western countries is an indicator of that. They were not prepared. They were not aware that there were preparations for the war, to which the West would respond to by introducing very significant sanctions, including freezing these reserves.
Yeah, freezing the reserves. And, of course, we've seen what's happening on the energy side as well. So then I think the natural follow-up there is that why did they do it? You think about how difficult it's been for them in Ukraine. We think about the economic repercussions there. Why did the Kremlin decide to go down this path despite all the difficulties involved? It must be a situation where they thought it was going to be much easier than it actually turned out to be.
Absolutely. And back before the war, we were saying in our analysis that decisions by the Kremlin could be miscalculations based on expectation of very little Ukrainian resistance, of very little Western response. It didn't work out for Russia, but they did expect a very short and victorious war indeed.
Yeah, and following that up really briefly is that when we're looking at some of the difficulties they've had, what have been some of the primary difficulties that we've seen over the last few months? Where have been some of the major headaches that the Russians have faced?
They have been multiple. One of the reasons is military command and control. Over the past 12 months, there have been 4 different generals in charge of this operation, and they typically lasted about 3 months each. It's clearly the military planning and execution were not up to date and were not successful. To add to this, Russia has been experiencing significant issues with supplying their troops, and this is still an ongoing problem. And morale levels were not particularly great. The Russians could not understand what exactly they're doing in Ukraine and why they're fighting Ukrainian forces, including the fact that many of them were surprised that locals were not welcoming them, but rather at least opposing them and in many cases resisting.
Yeah, we've seen that quite a bit when nations have undertaken this type of operation, is that they don't necessarily recognize the resistance that they're going to face. Thanks a lot, Alex. Really do appreciate it. Diego, maybe let's bring you into the conversation here. Alex has highlighted a lot of the difficulties that Russia has faced militarily in this situation, wishing things would go in their direction without necessarily having correct intelligence to understand the difficulty that they might face. Now, economically, as Alex had mentioned, a lot of their reserves were held overseas. A lot of these have been frozen. And then I think one thing that Russia did not expect is the advent of the energy-related sanctions and the possibility that the West might be united on the sanctions front. Coming from that and looking back over the last year, if you had to say what is the most surprising thing that you've learned over the last year, or maybe the thing you didn't expect to happen in 2022, what would that be?
Yeah, thank you, John. On the economic side and looking at the impact of the conflict outside Russia and Ukraine, so maybe the most surprising thing to highlight is how sort of resilient the European economy has been. And I think this has been a result of a combination of good planning and good luck. Good planning because European countries have been quite successful in replenishing stocks of gas in anticipation to the winter and building new infrastructure. Some of the efficiency gains that we've seen, particularly in the industrial sector, have been quite impressive as well. And good luck because so far we've had quite a mild winter. And it's something that we've been highlighting in our research, how key with the weather was going to be. And in that aspect, the luck has been Europe's side.
One of the big things that people have constantly said about this is that, yes, Europe can survive one winter. They were really lucky. It wasn't so bad. But one of the things that people have said is the Kremlin is counting that this thing might go on for a while. So therefore, how easy will it be for the European Union or European countries to be able to withstand another winter? What is your forecast for 2023? And then what do we see as far as being able to replenish energy stocks that ends up getting utilized for this winter?
Yes. So in terms of 2023, so the 2023-2024 winter, so we see the likelihood of this being relatively low, and the reason for that is that we're likely to end this winter with gas storage levels above average, and that should help to limit the downside risk for next winter. Now, over the long term, in the way I see it, the energy shock on Europe is like an earthquake, and now energy prices have come down, the storage levels have been replenished, so the earth stopped moving. But that earthquake caused quite a lot of damage, and some of this damage is going to be structural. We've seen in energy prices come down, wholesale energy prices to say, it came down quite substantially, but still around 4 times higher where they were between 2015 and 2019.
Wow. Okay. Yeah. Pretty impressive there. And I'm going to talk to Jack really quickly about those oil prices. In fact, maybe I'll bring Jack into the conversation briefly. Diego, I'll get back to you in just one second. I want to talk about Russia economically as well. But Jack, one of the issues that Diego brought up there was the oil price. And one of the issues that we had seen was looking at OPEC Plus and the decision there to cut 2 million barrels of oil.
Yeah, I think that what it boils down to is that the Saudis looked at this conflict through the lens of national interests. And what was very clear is that the subsequent price increases would result in a very significant windfall for, in particular, Gulf oil exporters. Saudi Arabia and the UAE, for example, just to put it into some perspective there, in terms of picking up exports into Europe over the course of last year, between January and October, they exported more oil to Europe than they had for the previous 3 years combined. That's very much the track that we've seen here. It's not necessarily that they're actively supporting Russia in the conflict. It's not necessarily that they're actively supporting the US position. It was a decision made along the lines of where exactly are the national interests best placed. For sure, their coordination of OPEC Plus has meant that Russia was able to maintain oil revenues throughout the conflict that it might otherwise not have. But from the Saudi perspective, they have tried to compensate, at least in terms of balancing with the US position that provided Ukraine with substantial financial support throughout the course of the conflict.
I think that's really interesting that you bring up there is that how much support has been offered by the Saudis and others to Ukraine. Don't hear enough about that. Why do you think that is? Why don't we hear more about that?
I think there's several reasons to that. At the start of the conflict, certainly, it was less clear what exactly the position of most Middle East and North Africa states would be in terms of United Nations votes on the situation. They tended to abstain. Now, over the course of the year, they have taken a more critical approach to Russia. For example, very few MENA states voted to support the Russian annexation of Ukrainian territory. And that's, again, in the framework of establishing a relative independence of policy making, particularly foreign policy. And this is something that we've been tracking for the Gulf states over several years now. So in that situation, being tied quite so directly to the US might not necessarily be seen as the strength that it was in the past. And being able to preserve some independence of decision making, I think that's the track that we're going to see moving forward. And it's something that we're seeing right across the board on a global scale at this point. States that may try to seek a more balanced middle position between potential global adversaries.
And that's a great point, Jack. And I think that brings maybe deeper into the conversation here. One of the states that we have seen that has done something quite similar to this, where they've said, hey, listen, maybe we can put our eggs in multiple baskets here. We don't have to necessarily be associated with one country or the other, has been China. They're beginning to pivot one direction or the other.
Thanks, John. It's actually been one of the key questions we've considered on Asia Pacific in our research for the last 1 year. It's interesting, right? Like similar to how we were discussing Saudi Arabia right now, there's a lot of focus on China's quote unquote no limits partnership with Russia. In fact, coincidentally, it was signed on 4th February, so just about a year ago. But what gets somewhat lost in the details is China's extremely important trade relationship with the United States and the European Union. So as much as China is perhaps aligning more politically with Russia and agrees with Russia on some stances vis-a-vis the US or vis-a-vis what it calls quote unquote the Western world order, it still has a very strong relationship that it needs to maintain with the US and EU. For now, they keep this focus, this dual focus, where their political eggs are going to be in the Russia basket, so to speak. They are going to continue that political relationship, but they won't ignore their dominant economic partnership with the West either.
That's a great point there. But at the end of the day, there are so many economic interests there that kind of suggest that you're going to have to pull in another direction as well, and that you can't alienate one side or the other. One country that has done this in some ways from the beginning has also been India, who on one side you hear all these technological relationship with the United States, semiconductors, we hear the Quad, a member of the Quad, so from a security relationship standpoint, that relationship continues to go with very few limitations, things really moving in a positive direction there. However, still a major buyer of Russian crude, and of course, historic relationship there with buying military hardware from Russia. So how has Russia been able to square this knot? How are they able not to alienate the United States and the West while still ensuring that they have some type of security apparatus that is continued to be provided for by Russia?
Yeah, I think the answer lies in where India finds itself right now on a time scale. India is somewhere between its past relationship, where the Soviet Union, before Russia as we know it now, came through for India a lot more than any other countries did, especially at a time when the United States was actively sanctioning India. And what India looks at are going to be its future challenges and opportunities. In its future challenges and opportunities, it realizes it needs the United States. As much as the US also is seeing that it needs Indian support, because if there is going to be some kind of a counterbalance to China in what is now dubbed the Indo-Pacific, it's likely going to come from some collaboration between the India and the US and perhaps other Quad partners like Australia and Japan. But what's interesting is India actually can't fully alienate Russia either, because Russia right now is playing a very interesting and important balancing act between India and China. So if India completely abandons Russia, what they're going to do is push Russia completely into the China camp and against its own interests in the Asia-Pacific region, which is something that India doesn't want to do. Having said that, what is interesting is, at least our assessment is that there's perhaps tacit approval from the United States for India's partnership with Russia to continue. There is awareness now that you can't just wean off defense systems urgently. It's likely also helping that India is buying as much Russian oil as it is, because there's some supply now into the international markets which are getting eased because of it. So just for context, Russia was not even in India's top 10 buyers in 2021. And in 2022, it was in the top 5 consistently. So I think that's helping the international oil situation as well. So yeah, if I'd say the balance is tilting slightly towards the United States into the future, but Russia will continue playing a key partner, at least in defense, agriculture, and some of these sectors where transitions take much longer than desired.
So it's interesting here that both sides seem to understand their limitations, and then, of course, countries are choosing in response to that, and so therefore able to utilize their relationships with both of the entities involved here. Diego, let's go back to you. This brings in an interesting point that I think that Deepa brought up, is that this relationship is in flux, and so it allows for Russia to be able to operate. And again, as I mentioned really at the top of the program, there was a lot of forecast out there suggesting that Russia was going to be hammered economically. There are some suggestions this isn't exactly the case, that maybe there's some slippage as far as the sanctions, or maybe Russia has been able to survive because of the higher oil prices, regardless of the energy cap or the price cap that has been, the West has tried to impose on Russia. Tell us a little bit about how Russia has done economically in 2022 versus expectations, and what do we see maybe for 2023?
Yes, and that's a good point. We talked earlier about surprises, and indeed, the performance of the Russian economy has been significantly better than many expected, although there are some concerns about the quality of the data published by Russia. It is estimated that GDP contracted by around 3% last year. And if we ask, why, there are many reasons some reasons that supported the economy. The first one, the fact that imports collapsed, and that helps to boost GDP. There's also production related to the war effort, and that helps to paint a better than expected short-term picture. I think what is important is to look, maybe just go beyond the short-term impact and look at how the potential growth of the Russian economy has been affected by this. So we had an exodus of international companies, and many Russian companies leaving the country. We also have collapsing investment spending, and for example, this illustrated in our forecast. We produce 30-year forecast, and our estimate for potential growth in Russia has been downgraded by more than 1 percentage point now compared to what we had in February.
And I was going to ask you really quickly, any forecast when it comes to Ukraine. I'm always difficult to understand where Ukraine is going when you're projecting the economic forecast for a war-torn area. But any thoughts on Ukraine?
Yeah, Ukraine, on top of the human cost of the war, which is huge, the economic impact's been enormous. So GDP is likely to have contracted by around 35%, which is much higher than the contraction activity following the collapse of the Soviet bloc. And again, we had a huge damage to infrastructure, calculated to be difficult to calculate the things, but some estimate put it at around $600 billion. And I think in the short term, it's difficult to see a strong rebound while the conflict, the active war effort, remains in place. So the economy will continue to be supported in a way by external support. So there's been external support put in place by international organizations, the IMF, the World Bank, so far of around $28 billion. And Ukraine will need more support because it's running a quite large fiscal deficit of around 7% of GDP, current account deficit of almost 10% of GDP. And these twin deficits need to be financed.
You think about that for many countries around the world, 7%, 10%, these are numbers that are pretty dramatic and suggest really almost a financial crisis in the works or some type of currency issue likely on the horizon. Diego, thanks so much. Alex, bringing you back into this, Diego mentioned the possibility that Ukraine needs this Western support or just support in general in order to be able to survive the next few years economically. My question to you is, you guys have just produced a scenario report where you looked at the possibility. Your three scenarios were stalemate, which I think you put about 60%, then you put Russian victory, I think you put that around 10% or a little higher. And then you put Ukrainian victory at 30, 35%. My question to you is, when you're looking at the next year ahead, what are you seeing? I think many folks out there see stalemate as the most likely scenario, that these guys are just going to continue to trade blows. Is that what you're seeing? And then maybe I'll ask you maybe one or two follow-ups to say what could change those dynamics.
Absolutely. Thank you, John. Yes, we think that stalemate is most likely, with neither Ukraine nor Russia able to have sufficient force to achieve their political objectives in this war. But there will be multiple factors which will impact the outcome, and there are many of them. For Ukraine, the key is ongoing Western support, both financial to keep the country and economy running, but also material and military, with a transfer of weapons and ammunition to support the Ukrainian war effort. With the announcements of Western countries supplying main battle tanks, it clearly improves the outlook for Ukrainians. And now we know that Ukraine wants other items, such as fighter jets. So if these get delivered and get delivered within the time frame which Ukraine needs them, and in numbers sufficient to be able to have an impact to change the situation on the battlefield, it will have the impact. On the other hand, it's the same for Russia. Availability of weapons, availability of troops. We know that Russia had conducted this mobilization at the end of last year, and there are about 200,000 troops who have been undergoing training since last autumn. Russia will probably be deploying them, most likely be deploying them in the coming month for their offensive operations. But the question is, how well are they trained? How well are they equipped? What kind of weapons are they going to have with them? How well the command and control will be during those Russian military operations. So there are multiple variables, both for Ukraine and for Russia, which can have the impact on the final outcome of this war.
Yeah, because I was going to ask you that. I think the consensus view for most folks that I've seen out there says stalemate is probably the most likely scenario. These guys are going to continue. They're looking long term. But most folks out there, a lot of folks out there, say that Russia has a military-industrial complex, right, that they can build on. Ukraine really doesn't. Ukraine needs $7 billion a year to operate its economy and its military, on top of the fact that we have Republicans now inside the House of Representatives that are a little bit more wary of Ukrainian support. So my question to you is, why is there no confidence or very little confidence in a Russian victory at this point?
As we know, large and populous countries have been defeated in the past by smaller rivals. So it's not that size is the only factor here. We think that, yes, we agree that the stalemate is the most likely outcome, but we think that a Ukrainian victory would be somewhat more likely than a Russian victory, because look at the performance of the Russian armed forces in the past year. There have been multiple issues with command and control. There have been 4 different generals in charge of this operation, who last an average about 3 months. There have been very significant losses by the Russian armed forces, and attrition has been very high, much higher than in other conflicts in which the Soviet Union and Russia have been taking part after World War II. And also a key element here is morale and motivation. Ukrainians are defending their own country, and they have support of the civilians. Russians do not have that, and morale levels of the Russian forces are not particularly great. So multiple factors would suggest to me that Russia is not having an upper hand in this war, despite being a larger country and despite spending much more on defense than Ukraine. And it is supported by what has happened in the past year. As of March, Russians controlled 28% of Ukrainian territory. And right now it's down to 18%. So we've seen that Russians could not keep control of the territory. They were forced to withdraw, and Ukrainians were conducting successful counteroffensive operations.
Alex has just mentioned past is prologue. So the reason why the forecast for stalemate is associated with what we saw in 2022. Diego, let me bring you back into the conversation. Is past prologue as far as energy? We talked a little bit about before. We're expecting that these energy supplies will be replenished. Is the energy crisis over? Are we going to start seeing substantial price drops, and all of a sudden household issues are likely to dissipate over time?
Yes, no, I wouldn't go as far as to say that the energy crisis is over. First thing I would like to distinguish is the year-on-year price comparison and the level. We're very likely to see energy prices falling when compared to the levels in 2022, but that's because energy prices increased substantially, particularly in the third quarter of last year. But still, the level, we expect them to be significantly above where they were before the pandemic. So this is a real change particularly for European industry. And it's interesting when we look at the data, for example, talk about the resilience of the European economy and industrial production, for example. We look at the latest numbers, increase on a year-on-year basis in November. But then if we look at the breakdown, we see that production in some key sectors like chemicals, base materials, so basically sectors which are high energy intensive users, production in those sectors has collapsed. And the question is, will this production come back? Is this a temporary effect or is it a permanent effect? And we see that it's very likely that some of this production that is not now in Europe will not actually return because of energy prices, and also because we are seeing a change in a way that industrial policy is designed not only in Europe but also in the US and China. So I wouldn't go as far as to say that the energy crisis is over by any means.
Okay. Thanks a lot, Diego. Okay. Great conversation, great discussion with all of the panelists here. I want to go ahead and thank each one of them. The one thing I want to do now is maybe move on and talk to a segment that we call Signpost. And what it is really looking ahead over the next year. If each one of our panelists could maybe give 15, 20 seconds looking at the year ahead, what is the one issue, two issues that they're looking at that might change their forecast going ahead? Alex, take it away.
Thank you so much, John. I think the delivery of Western tanks to Ukraine, and also, if it happens, delivery of fighter jets, has potential to significantly change the situation. Also, obviously, if this war spreads to other countries, would be a different scenario if, for instance, Belarus becomes involved. Additionally, if this war goes beyond the conventional weapons territory and Russia opts for the use of CBRN weapons against Ukraine, those would be the big game changers.
Thanks, Alex. Diego.
Yeah, thank you, John. First one I will highlight is energy prices, and particularly diesel, particularly given the upcoming ban on Russian refined products next week. That's the first one. And the second one, I will look very closely at, particularly outside Russia, Ukraine, business failures in large Western European countries, which should give us an indication of long-term impact of the energy shock on the European economy.
Okay, thanks a lot. Appreciate that, Diego. Deepa.
Thanks, John. I think a couple of things to watch for Asia Pacific would be if there's more reports or there's more focus on whether either China or India are serving as point of transshipment of some Russian goods that are under sanctions, or even if there are fund flows which are going towards China and India, that could be sanctioned money that is landing up there. And linked to that would be the intent within countries like the US and blocs like the EU to then impose secondary sanctions on China and India.
Yep, absolutely. Absolutely. Okay, and then Jack.
So I think we'll be looking at the continued Iranian military support for Russia in the conflict, not only directly how that impacts the conflict in Ukraine, but how opposition to that starts to unite other MENA states in trying to confront that Iranian influence.
Okay, that's great. Thank you so much for those signposts. Really good, really interesting. Right. I want to thank all of our analysts and economists, and also want to give a shout out to you, our listeners. Couldn't do this without you. We will see you next time on The Horizon.
Thank you for listening to the Economics and Country Risk podcast. Connect with us on LinkedIn and Twitter, and don't forget to subscribe to the podcast so you never miss an episode.